Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, May 31st, 5:09 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. And what a crazy day it was to wrap up the month of May. State of the market, weakening uptrend. You can see the trend gauge over here actually got a bit better today, all because of a very strong move the last hour in the market, including a big squeeze to the upside the last 20 minutes. Every day the market comes out, the indexes, not the indexes, the NYSE and the NASDAQ, they have you can put on close orders in, and they try to balance them, and they publish what the amount of the market on close is and whether it's to the buy side or the sell side. And very much unexpectedly today, it was big time to the upside, like $6.7 billion. And that just sparks bullishness, or contrarily, on the other end, it can spark a bearish close if it's a market on close sell orders as they try to match up the buys and the sells at the close. So this was definitely a tale of 2 days. Uh, the day split in half. I'm kind of even struggling to find the words to describe it. It was definitely a unique day, and it started out with tech leaders getting smacked. Dell, one of the kind of crowned by Jensen, the CEO at NVIDIA, as one of their preferred partners for servers, had a very lackluster earnings report Thursday after the close. And that trickled through to a bunch of the hardware companies that are tied to AI data center construction. And those have been really the tech leaders. A bunch of them got smacked uh, out of proportion to what was going on with the rest of the market. Small caps were up. The S&P was down, but not badly. This was a very clear case of sector rotation. In fact, at one point, XLK was the only one of the sectors, the 11 spider sectors, that was down while all the rest were up. So it was a clear case, again, very similar to yesterday, of value getting flows out of growth sectors. And that really ended all the way into the close with, like, for example, the S&P 500 growth half up 0.2%, the value half up 1.6. So, but that's a positive sign, and it's one of the reasons, again, I talk about this a lot, one of the reasons why we keep a foundational position in the S&P 500, because days like today, if you're a growth investor, you're primarily in tech names. It's just the fact of that's what leads the market higher, and certainly this AI boom is contributing to that. Not that there aren't some other growth sectors in our 21 over 21 list. We have a mandate to have at least 10 different sectors in there. But if you're all in on growth sectors in a day like today, you really can get taken behind the woodshed. And we did underperform today big time, but the S&P 500 position that we have helped balance that out quite a bit. So check the trend gauge over here. We do have green arrow for market leaders and the yellow sub arrow because of some of the weakness that we have been seeing. But by the end of the day, only 3 of the 21 on the week ended up below the 21 over 21. If I'd have taken a snapshot at 1 o'clock or 2 o'clock, it would have been closer to 7 or 8. But we go by the close, and it was an impressive close. Improvement. Only the Dow Jones Industrial Average now below the 21-day moving average. That's our short-term trend indicator. The Dow is also the only index below the 50-day moving average. It bounced today right at the 30-week, which is the equivalent of the 150-day moving average. and ended up near the highs of the day, much similar to the way the rest of the indexes are. All five of the major indexes still above their long-term 200-day moving average. And I say it frequently, the market never gets into serious trouble unless we start breaking that key level. That's where all bear markets occur. So I kind of already mentioned what happened today. Tech leaders smacked, but extreme volatility on the day, month-end shenanigans, big market on close buy, bullish positive reversal got the S&P and the NASDAQ to reclaim the 21-day moving average. And hey, let's throw in the mid caps and small cap indexes reclaiming that level as well. So here are the final numbers. When I say leader smack, that certainly carried over to our 21 over 21 list, down an average of 1.3%. Only 4 of the 21 up, 1 neutral, 16 down. The big 8 suffered as well, down 1/3%. But breadth came back in today, and it was, for the second straight day, a case of the recent leaders taking a back seat to what had been beaten down. RG8, this is our 8 growth ETF composite, up 0.18. And again, a tale of, if you want to look at a tale of what the market was, FFTY down 1.19%. That's the IBD 50 growth index. But RSP, the equal weighted S&P 500, up 1.33%. Our portfolio, GROTECTION, naturally leads toward the FFYT, which is why you'll see down here, we were down 0.8% today, but well off the lows as the S&P part of the portfolio rallied strongly. The leaders certainly bounced. A lot of them put in hammers and undercut and reclaimed the 21-day moving average, but not bouncing as strongly as the broad market. NASDAQ 100 down 0.19, but equal weight positive by 0.2. The Dow, the beaten down Dow, getting its revenge, bouncing, as I said, at the 30-week moving average, up 1.5%. Mid caps up 1.1. Russell 2000 small cap up 0.66. Global diversified 60/40 stock and bond up 0.5%. And I mentioned the underperformance of GROTECTION. We're going to take a look at all of the charts in there. But first, we're going to start out with the S&P 500, and you can see this big candle. Let's go to the 15-minute intraday, and you can see the strong open. Before the open, everybody was talking about PCE. It came in line, slightly better on some of the numbers below the headline, and the futures, which were negative or near flat, spike to the upside, but that started to wane as we came into the open. Still opened up 0.15% on the S&P, 0.1% on the NASDAQ, but put in the high within the first 30 minutes and then a pretty steep sell-off you can see here. But this looks a bit like a goalposts, because as hard as we went down in the morning, big reversal at 12:30. You can see the rally, and then this last 20, 25 minutes, the big squeeze to the upside. So where does that leave us? Well, I've been showing this chart, and this was the CPI gap up, and then we battled around in a tight range, had a failed breakout on the NVIDIA earnings report that ended with a failed breakdown as we got back into that range, but failed again, broke below that 5250 level, and now all in the course of a day, down and back into it. So really what we're seeing is a lot of chopping around, and that was quite a close today. That we're going to go, as we always do, go through thousands of charts over the weekend to see what conclusions we can end up drawing. But we draw a lot of our conclusions by where we are relative to the moving averages, and then that carries through to the individual names that are on our leaders list. So crazy day today, actually closing slightly back, really right on the declining 8-day moving average. So that's one of the key things that we'll be watching next week. The market acts the best when we're above the 8, above the 21, the 50, and of course that means the 100, 150, and 200 as well. I also have, since it's month end and end of the week, I've got the weekly charts on here, and you can see this looks like on a weekly chart, a normal pullback to the 10-week and a bounce off of there. And that's pretty bullish from a setup standpoint. We held where we needed to, and it certainly draws a line in the sand to the downside, as that level should hold. Very similar to any touches on the rally that we had from November through March. Anytime we came to the 10-week, we bounced until we didn't. And if we're going to break, that was a spot to break, and we didn't today. We reversed, and on the week ended up down just a 0.5% after a 0.8% gain for Friday's session. Here's the NASDAQ 100. Didn't quite get to the 50-day, but undercut, reclaimed not only the pivot of the flat base, but the 450 level, but also the 21-day moving average. You can see it didn't quite touch the 10-week over here. Continued outperformance on a relative strength standpoint. Not this week, but as it was down 1.58%. But from a how much did we pull back versus how much did we run, you can see the prior 4 week before that, extreme relative strength, 5 weeks actually. Let's go to the Dow Jones Industrial Average. On the weekly chart, you can see the bounce here at the 30-week that corresponded with the 38,000 level, still below the declining 50 and 21-day moving averages. The mid-cap index, S&P 400, 2 closes below the 50-day, but jetting back above and strong all day were mid caps and small caps, back above the 50 and the 21. This green line here is the 20-week moving average. We didn't quite touch it. You can see how it provided support about 6 weeks back when we were testing that level, not only on mid caps, but also on the rest of the indexes. Let's go to the Russell 2000 now. And you can see a reclaim of the 21 bouncing off the 50-day moving average, and also bouncing at the green line, the 20-week moving average as well. So support held where it needed to. Today's lows, this week's lows, critical going forward. They need to hold, or the market will again attempt to retest lows. If you listen to the podcast, it was filmed around noon on Friday, and things weren't looking so good at noon today. And we were talking about getting more defensive, which we did because we got stopped out of quite a few of our names, but either locking in profits or small losses. And things certainly changed, as we'll be looking to, as long as we stay above the 21-day and the 8, we'll be looking to add some exposure back into either the indexes or leading sectors next week. All right, let's go over to the VIX. The VIX acted like nothing was going on today. If you look at the final number being down 10.7%. Let's look at this intraday. Yeah, that's just the complete inverse of what we were seeing, spiked all the way up to 14.9 and then all the way down to 12.9. That's like casino-like action. Nobody really likes casino-like action, and it's one of the reasons why people talk about the efficient market theory, but there was nothing efficient about the way the market was behaving today. On to the dollar. Very small loss on the day. On the dollar, bounced at the 200-day moving average, trapped between the 200 and the declining 21. To the downside were precious metals today. Breaking the 21 was GLD, down 0.6%, sitting on the 50-day moving average. Gold stocks, GDX, undercut but reclaimed the 21-day moving average, down 0.73. And silver gave back that entire big move that it had on Tuesday, gave it back on Wednesday, Thursday, and Friday sessions, down 2.3% on the day. On to Bitcoin, using the IBIT, pulled back, bounced at the 21-day moving average nicely, just the way we would want it to. Now on to bonds. I mentioned yields dropped after that PCE inflation data came out at 8:30 Eastern time, and you can see bonds closing near the high of the day. Bond prices up means bond yields down. Here's the price first of the 30-year, the TLT, up 0.7%. Yield pulling back right to the 21-day moving average, so filling that gap of where the yields gapped up on Wednesday, and TNX, the 10-year, down 0.88%. All right, that's our inner asset correlation chart section. Let's move on to the tail of the tape. So just one day below the 21 and back above, keeping the bull case intact here. Expectations, I guess I'm kind of going to leave them at neutral after a crazy day like this, wanting to see some follow through and certainly at least hold the 21-day moving average on Monday's action. Let's see, where are we now? Let's go to sectors. As I said, 11 out of 11 sectors. Spider sectors higher, led by oils to the downside. Semiconductors, solar, and gold and silver stocks. Portfolio changes. Stopped out on quite a few things in the morning. Dell, CrowdStrike, Spotify, and SSO. Trimmed VRT, Micron, CEG, and UPRO. Still holding First Solar, Pure Storage, PDD, Micron, CEG, Kava, and NVIDIA as our biggest holding now, surpassing VRT as we got stopped on half of that, as well as Bitcoin, gold and silver stocks. Trimmed half of TBT. I didn't mention that in here, but I need to squeeze that in there. That was our yield play. And of course, the index ETFs, we own those as well. So, bottom line on the day, tech leader smacked, but volatile end of month ends with a bullish reversal to the upside. Take a lot of studying this weekend to lay a plan out for next week, and we'll see how we end up as we come in to next week. Never a dull moment in the market. So let's get over now to the 21 over 21 list, and we're going to sort it by strength on the day, how much we were up. We'll start with Goldman. Remember over here, green flag means we own it, and you can see the weekly and the daily charts overlaid here. So, for example, Goldman Sachs down 1% on the week. On the day, up 1.4%, undercutting and reclaiming the 21. Cameco making higher highs. FCX as well, undercutting and reclaiming the 21. Howmet continues to trade tight sideways near the top of this acceleration to the upside after its earnings report. Transmedics pulled back for the first time since its earnings report. Still a great looking weekly chart. Kava, a little bit of volatility today after its earnings report, but certainly responded the way it needed to when the market reversed to the upside today. CrowdStrike, this is one of the three that are going to get punted from this list. Big disappointment, big volume selling, just didn't see it. We expected more institutional support in this, but this tells me it was probably more in the hands of the hedge funds, and they're quick to get out if things reverse to the downside, and they very surely much did on CrowdStrike. GDX holding the 21, NVIDIA bouncing at the 8-day exponential moving average, Micron bouncing at the 50, undercutting and closing right on the 21-day. AppLovin undercutting and reclaiming the 21. PDD, tight range today. TBT pulled back, as we already discussed, along with Bitcoin bouncing at the 21. First Solar pulling back, bouncing near the 8-day exponential moving average. Nutanix, the second stock that'll very clearly be coming off of this list after just a terrible reaction to its earnings report. Spotify will be the third one coming off as it closed below the 21-day and really not showing any relative strength recently. Abercrombie and Fitch pulling back for the second day after its earnings report. CEG undercutting and reclaiming the 21. We still have a piece of this. We still have VRT undercutting and reclaiming the 21, and Pure Storage pulling back for the second day since a stellar earnings report, but I guess just got a bit too extended and pulled back along with the rest of the AI data center infrastructure plays today. So that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner, Dan Stewart, can be reached at dan@revereasset.com. Our flagship portfolio is named GROTECTION. It's designed to grow assets in uptrends, protect them during downtrends. Sometimes there's going to be whipsaws along the way. Today, possibly one of them with the big shakeout. We had been lightening up over the last couple of days as breadth deteriorated. But the last 2 days, we saw more rotation out of growth into value. That's good for the overall market, not so good for tech leaders. But a lot of them bounced where they needed to. A lot of them undercut and reclaimed the 21 the way they needed to. We'll compare their weekly charts versus their daily charts, and we'll have at least 3 new entries on the 21 over 21 list next week, which we'll talk about in Monday's video. And with that, I'll wrap it up for the week and the month ending May 31st. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.